How much time you got? First of all, you always need to have, it's called asset protection, right? So the first thing you have to do when you have a house.
Welcome to the Real Estate Investor Network podcast, #the network. This is episode 2, brought to you by BriteBooks360.com.
Hey everybody, how you doing? Jeff Shipp here. We're with the Michigan Real Estate Investors Network. We're at their podcast, The Roundtable. We have 3 guests with us today. David Soble, to my right, who's an attorney. Paul Beets, an investor. And Chris Jens, who's an investor. And today we're just going to be talking a little bit about what's going on in their life and what's happening, and we'll be asking David a lot of questions about law. So why don't we start off, David, you a little intro.
Well, I noticed that we're at a square table and not really a round table today.
Yeah.
That's okay. My name is Dave. Where am I looking? Over here?
Yeah.
All right. My name is David Soble. I'm a real estate and finance attorney here in Michigan for, for almost 30 years. It will be 30 years in June. And let's see. I deal with everything with regards to real estate and finance. I always like to say that not only do I talk the talk, but I walk the talk. So I really am empathetic towards real estate investors because I own property as well. And Paul and I just had breakfast this morning. We were kind of talking about landlording. Yeah. Sorry about that, Dylan. And was very empathetic. I no longer act as a landlord, but was listening to some stories, and actually I started sweating. Beads of sweat started coming on my forehead. But I deal with like default servicing, which is like evictions, monitoring, collecting monthly payments. I also deal with a lot of real estate transactions, so documentation, anything from just a regular purchase agreement, for most investors, all the way through to the closing, working with title, due diligence is what they call it. So for multifamily properties, single-family properties, commercial properties, I think I have close to $3 billion worth of transactions under my belt now. So I've worked for some of the largest banking institutions in the country, and I actually still do work for some of the banks. So that's me.
Okay, good.
Thanks for having me.
Paul, how about you?
So I've been here many times already, but I'm a real estate investor in Indianapolis mostly. Maybe one day I'll expand beyond Indianapolis, but I've got 3 properties down there.
Good. Chris, how about yourself?
I'm a real estate investor as well. I'm pretty new to investing. I spent the last 14 years I still work in property preservation and maintenance. So, really just working on building my network and long-term goals of building a income-producing portfolio.
Okay, that's good. So you two both have W-2 jobs right now. You two
That's
both
correct.
actively work.
Yeah.
David, of course, you own your own business.
Yeah.
Okay, so you two, it's a little bit more difficult, I would say. It's not impossible. It's a little bit more difficult because you are working a full-time job.
Yeah, I think David's been there though. He was saying he had to moonlight on the weekends.
Well, I moonlighted on myself, actually. We were talking about that, right?
Right.
So during the day, I'd be in the office doing all the paperwork and all the lawyerly things that you would do, and also, owning property. And most of my stuff, I didn't go out to buy like a single family one-off or wholesale or flip. I held mortgages and still do, and land contracts. So if I had to take a property back, that's kind of how I would come into actually being what we call the fee absolute owner, right? And so on the weekends, when I was a younger man, I had a pickup, and I would go in my jeans and T-shirt and then go on, attempt to do all the maintenance work on these properties throughout the state. So I moonlighted on myself. It was actually kind of fun. My favorite part was actually going through the drive-thrus of whatever the fast food place was closest to the house.
So I moonlight on the side, right, as a real estate investor, and probably work, 40 or 50 hours a week, in my W-2 job. I work for General Motors, and so trying to build a cash flow portfolio so that I can get closer to financial independence and maybe retire a little early.
Yeah, yeah. See, your situation is a little bit different too. It's actually a great perspective that you bring because you're doing out-of-state investing,
Right,
which
exactly.
brings a whole different level.
Yeah.
And Chris, you're here looking to get into it, and you're wanting more rental properties too, right?
Correct. And, primarily in Macomb County, I'd like to start out doing, wholesaling to build capital. And then, my long-term goal is to, build an income producing portfolio, the toughest thing with, having the W-2 job is, just like you said, like we all get to finding the time to do it. And you have to, squeak out all the different hours in the day, and you really have to, prioritize where you're going to do specific things. So you really have to plan it out perfectly so you can, get exactly what you need done when you need to get it done.
Sure, sure. Now you're just starting out. Is there any kind of questions you have, like for David, about what you need to look for and what you need to do that would, kind of help our audience also? Because there is a lot of new people starting out. So, what is some of your stumbling blocks right now as a new investor, kind of where you stuck at?
I guess, as a new investor, something, I've always wondered on the importance of, your protecting your assets and the importance of, having, your LLC and holding, if you have your LLC, holding your property in your LLC, or if you have a large family, do you need to put things in an estate? And, how, basically how's the best way to protect yourself when you're investing in real estate?
It's like a loaded question. How much time you got? First of all, you always need to have, it's called asset protection, right? So the first thing you have to do when you have a house, your first or second home, is to make sure, of course, that you have hazard insurance on your property, right? So that gives you sufficient protection initially. But as you start to grow your business, you're going to want to have a limited liability company. You form a corporation. And when you form a corporation, you're going to pretty much, you purchase your properties and do all your business underneath that corporation. We call it a limited liability company. You can also have a C Corp with what we call an S Corp election or an S election, which is an IRS formation. But for most people who are endeavoring into real estate and they're engaging with, let's say, 5 to 10 homes, you're going to want to have an LLC. And you can form that with an attorney. You can do it on your own. It seems that a lot of newer real estate investors like to do that, but unfortunately, there's some stumbling blocks there. But most LLCs give you certain advantages over owning what we call an C Corp.
Okay.
So a C Corp is like Inc. When you hear Inc. Okay. So you own the LLC, the limited liability company. You're what we call a managing member. It's usually you, or it's closely held between you, let's say, and a partner. And what you get from having an LLC is the asset protection afforded to larger corporations that you always think about, right? Like you're no different. You're treated the same way as, let's say, as McDonald's or any of these other large companies. You get the asset protection. So God forbid something happens with the building or your property, somebody trips and hurts themselves, or there's so many different things that can happen. Right. It's like the law is gray, and there's so many different events that can occur. But whatever it is, when you have an LLC, you're protected personally. Your assets personally are protected because the limited liability company gives you that shield.
Okay.
From any type of lawsuit. I mean, you will be, you could be sued, but personally, you're not liable. It's the company. But here's the thing: you have to act like a limited liability company. You just can't form that company and not do all the required items that the state requires you to do on an annual basis. So one of the things that you need to do when you form an LLC is to have an operating agreement, to generate an operating agreement. It's really easy when you have a member, you're the only owner. Yes. So they call that a single member LLC. But when you start to have, your friends or you find somebody you really like to work with as your partner, and now there's what we call a multi-member limited liability company, you really do want to have that operating agreement indicate what are the responsibilities, duties, liabilities of and for each member. Okay. So those people who know me know I don't really rail on internet forms and documentation or services because there's so many out there. I love when people download all their information from the internet. it's kind of like practicing medicine when you're not a doctor. And you go,
WebMD.
WebMD. I talk to my friends who are physicians, and they'll say, "Oh my God, I hate the internet because people come in and they tell me what the diagnosis is. It's completely off." Well, it's actually worse with law because it's easy to read, a piece of paper, and if you're semi-intelligent, most people are if they're dealing with real estate. You might be a little crazy, but doesn't mean you're not intelligent. And it's easy to read what's on the form. That's not really what the practice of law is. The practice of law is understanding what the consequences are with regards to those provisions. That's a whole different realm.
Okay.
And most people don't get that. And so they come in to my office. I handle the whole state of Michigan. And they'll come in and they'll say, "But I did this," or "I filled out this form. And see, I got it from legal, Boom or whoever. We won't say who they are." And that's great. But those are very basic documents. And even if some of these services will have an attorney online that they can, call online. Well, if they're an out-of-state attorney, I just had this, just recently I had a guy call me, actually a husband and wife called me from Kentucky. And they own property here on the west side of the city. And they're asking questions related to this property. And they said, "Well, we call," whatever it was, they said, "Well, what about this provision?" I said, "Well, that doesn't apply here in Michigan. You need to go to an attorney in Kentucky. If you're going to deal with Kentucky property, you get a Kentucky attorney. If you're in Michigan, you get a Michigan attorney." Okay? What happens a lot of times is that you're getting advice online from people who don't even deal in your state, or they're an attorney, if you pay for an attorney to be the one who deals with, the call, because some of these services will contract out to an attorney online. You're getting very basic information. It's usually very cursory.
Yeah.
And the most important thing, I just had a client, if you go online, I don't want to be too pluggy, but I just had a client that we saved over $52,000 on a transaction that he was about to engage in. Okay, he was about to close. And for like 2 weeks, he had called me and he's like, by the way, and he's a real great guy. If he's watching, hey, the document was 85 pages long, 85 pages. And he gets it from a bank that he's going to buy this foreclosure property. It's an REO. And he just wants to pick my brain over the phone. And that's okay. Brief, cursory, discussion is good. But 85 pages, there's no way. It's kind of like, again, somebody picking up the phone and calling a doctor and going, "Hey, my knee hurts," or I have a pain in my neck. What can you do for me? To be diagnosed over the phone by a doctor is no different when an attorney has to diagnose an individual over the phone. We have to figure out and analyze the document. I just can't take whoever is on the other side, their word for what this document says. So 85 pages takes a couple hours to review. I can assure you. He didn't want to pay for that. So what did he do? I'm a member of several groups online, and every night, my kids are grown, and so I have some time on my hands. I'm not chasing after little ones or anything like that. And I'm online, and I see this guy asking, by the way, 85 pages at approximately 10-point font, single space is a lot of content. He starts cutting the pieces of the contract out and just putting it out there for his fellow investors and saying, "Hey, what do you think about this? What does this mean?" Well, they're no different than he is. Go to an attorney. Don't come to me. Go to some attorney. I feel like I'm lecturing you.
No, you're not getting a lecture.
I do my best lecturing. The joke is I do my best lecturing at home, right? But so always, if you're not sure about a document, including the most basic of documents, you got to get yourself an attorney who specializes in real estate.
Yeah, that's
it's right. Yeah, you can't do a criminal attorney to do your real estate.
Oh, you
business.
can, but you're probably going to get messed up. So
Yeah.
you can go in and
Right?
do that. Yeah, if
Right?
you're in trouble.
You'd be shocked what people do.
Now, Paul, you're running all your stuff through an LLC.
That's correct. Yeah.
Okay, so yours is out of state. So are you running them through a Michigan LLC?
No. It's an Indiana-based LLC.
Okay, so you're running one out of the state where your properties are in.
That's right.
Now.
That was what was recommended to me by my attorney.
Okay.
right? The Indiana-based attorney is, to hold my Indiana property in an Indiana LLC.
There
So,
you go.
If there are any taxes to be paid, then I pay those to the state of Indiana. So it gets a little complicated, from a tax perspective,
Right.
because the more properties you own and the more states you own, I have a CPA that is specialized in a real estate CPA. He happens to also be in Indiana, but he, operates in several states. And so I ended up paying taxes in like 4 different states last year, right?
Oh,
It's
that's
right.
always a
Yeah.
joy, isn't it?
But right, but Paul, you don't need to have 4 different corporations or 4 different LLCs. You know that, right? I don't really know your personal circumstances, your business, but in general, let's say you have properties in Indiana and you have them in Ohio and you have them in Kentucky. You can have one LLC. They just have to register in that state. Okay.
Oh, I see. So let's say I've got my current LLC, and let's say I want to go buy property maybe in Michigan.
Yeah.
I can use that LLC and I can register that LLC in Michigan as
As
well.
a foreign corporation.
Oh, okay.
But the law, like anything related to the property law, is going to be Michigan property law.
Sure.
So, as you get, a larger portfolio, you don't have to have a different LLC for each, property. I mean, there are people actually who will have one LLC. I've seen clients, they'll come in, they'll have like 2 pages of properties, and they name their properties, or they name their LLCs the name of their properties. So like 1, 2, 3 Main Street. And they'll just have a list of each property, and they have an LLC for each one.
Wow.
But you don't need to do that. I mean, that's, unless it gets expensive. It's a lot of bookkeeping.
Well,
right.
It sounds like their tolerance for risk is real small.
Right. What do you do, Jeff? I mean, you have all these properties. What do you do? You have how many LLCs do you have?
I have one.
See,
That's
smart.
it. Just
right.
one LLC is all I have.
Right.
I mean, if something happens, it happens. Let's hope it don't.
Yeah.
But, you got to look at your risk tolerance is how I've always looked at it, And now, if I had, 40, 50 properties or something like that, I would probably break it up a little bit, like C-class. You
That's
hear
what you
guys
do,
doing
right.
C-class neighborhood, B-class, A-class neighborhoods, multifamily.
Yeah.
Break it up so if something happens there, you lose them, or you got to litigate. You're just litigating on a little bit.
So, David, you mentioned at a recent REIA that there's a guideline of how many assets or value of assets per LLC.
No, it's not. It's kind of like it's not even a rule of thumb. It's just something. It's my own personal preference and from just experience. So you can do it like what Jeff said. Like you could do it geographically. You could have an LLC that just says, this is my East Side LLC and the West Side. So that's how you just know your properties. You can do it like what you were saying. Level of property. You put your, you might have multifamilies under one LLC and your single families under another. You can do it any way you want. But
if I'm sued, let's say I've got my current circumstance, right? I've got 3 properties in a single LLC in Indianapolis, or it's an Indiana LLC, and all the properties are in Indiana. So if somebody tries to sue me from one of those properties or something else, those properties are all potentially exposed to that litigation.
Right. Right. That's correct. That's why you'll have some people who are very active in real estate. Every property they have is under an LLC.
Yeah.
Those are very risk adverse people.
Yeah.
There's a pro and con because also with each, it's very inexpensive to maintain an LLC, but each LLC has to have its own checking account, savings account, right? Whatever you're using it with. So now it's a lot of bookkeeping. So there's an expense, it's a kind of a risk reward assessment.
Yeah.
I think that's a little bit too much. I do I said at the REIA, which the Macomb REIA is, you like that?
Nice plug.
Yeah. Which is a great event, by the way, purely educational. Like 3 to 5 properties in an LLC.
Yeah.
That's what you should look for.
That's about what I've heard as well, is 3 to 5 properties.
Yeah.
Don't forget, you're going to have, if you're a responsible property owner, and I'm sure you are, you have to have homeowners insurance or investment property insurance. So that's going to be your first line of defense. But here's the thing. I just spoke on this elsewhere. There'll be people who say, well, why do I need an LLC? I just have insurance. Okay, well, if you have a home that's, what the average single family home that people are not flipping, but buying is going to be from like 60 to 120 grand.
Yeah.
Okay.
Right in that
On
neighborhood.
average,
Yep.
right? And am I right, Jeff?
Yeah.
Okay.
In the normal neighborhood.
Right.
Yeah, we're not in Birmingham.
Well, Jeff, I'm looking at you and I'm like, well, I know you go to some great places, right? But it's not like
20,000.
Sturgis, right, Paul?
Right, exactly.
Oh, no disrespect to our Sturgis viewers, but so when you have that insurance, let's say you have a $60,000 home, the most insurance you can get is a homeowner's policy that's going to have like probably replacement value.
Yep.
Yeah.
So it could go up to like 120 to, if you have a $60,000 home, 120 grand, let's say.
Yep.
Okay, maybe a little bit more, but that's it. So what if you have an issue with a tenant and they sue you for $1 million?
Right. That's not going to cover it.
That's right. So
Right.
people forget that, and I will tell you, the younger, I don't know, it's not based on age. It's the inexperienced investor says, I just have the insurance. Well, if you do it long enough, and you're a landlord, you're gonna get sued. And
that's guaranteed.
right?
If
Well,
you're in the business long enough,
you're in court every day, aren't you?
I'm trying to buy stuff, but I get sued. Luckily, I'm trying to buy.
Right.
But yeah, you will get sued, and that's a fact.
Yeah.
Especially if once you get to where you have a lot more properties, your odds of getting sued,
Oh, yeah.
put it to you that way, are going to become extremely high,
Yeah.
unfortunately. And Chris, you're hoping to get to that point, right?
Yeah, eventually. Eventually I'll get there, but right now I'm in the capital stages, so I figured go through wholesaling and to build capital. I did start an LLC. I actually had an attorney start an LLC
That's
for
good.
me.
That's good.
I originally started it was a C corporation. I had him convert it to an LLC. So we have that.
Yeah, you don't need, when you're starting out, you do not need to have a C corp, because you have the IRS gives you an S election, which is a kind of works like a passive income. It goes through your regular 1040, but there's still more requirements with your C corporation. So keep it simple. I do the KISS method. You know what the KISS method is? Yeah,
No.
You don't.
Keep
You're
it
really young.
simple.
He's
Keep
young.
it simple, stupid. Yeah. KISS method.
All right.
But yeah, once you get to that point, so you've already started, so you got the LLC, but a lot of people watching a podcast, don't think that you have to have an LLC to get started. Get out there and take action and get started and get the LLC. It's not that much money to go to an attorney and get it done to protect yourself and protect your family. But don't let that stop you from getting started, getting out there, taking action. We don't want everybody to think in the podcast, out there listening to us, that you're got to wait till you get all this. Get action, get going, and get this stuff along the way to protect yourself.
Yeah.
So your family isn't set to liability. And, it takes some pressure off you. It really does for me. I know when I'm signing that and I'm signing underneath the company's name, it actually makes me feel a little bit better. It's like, okay, if something happens down the road, they're coming after the company. I'm going to lose that. That's going to hurt a little bit, but you'll be okay at the end of it.
So I've got a question about that. So as just getting started with an LLC, right? You're funding a lot of this with your own capital, right? Just to get started, get your first deal. So when they talk about piercing the corporate veil and the co-mingling of funds, so what are some of the guidelines or recommendations that you make to make sure that, if let's say I drew a short straw, right, and I get sued, I only have one property in there, right? The insurance doesn't cover it. What actions, could I have done to pierce that corporate veil, and then they just go after me personally, or they're allowed, or the judge allows them to go after me personally?
Yeah, it's a great question.
That's a real good one.
It's a great question. I actually have a case right now. We are actually suing I'm not going to say the type of business, but it's just the defendant, and we are actually going after. We are piercing the corporate veil, and we have to request that from the court.
Yeah.
And the reason piercing the corporate veil basically means the corporation that was set up that you're pursuing isn't acting like a corporation.
Yeah.
Okay. So it prevents people from hiding behind what we call the corporate veil.
Yeah.
All that asset protection and liability that you're protected against. If you don't act like the company you're holding yourself out to be, using it's government regulation, the state regulation to protect you.
Yeah.
If you don't do the things that a corporation would do, normally, and I can give you a list,
Yep.
then you can go to a court and say, you know what, Chris, you formed that LLC, but everything you do looks like really you're an individual who's just not following the state corporate, company laws, and you're commingling your funds. That's one.
Mm-hmm.
That's an indication. Number two, not having an operating agreement, not keeping your annual books, not having annual voting or whatever your operating agreement requires. Those things, if you don't do that you say you should be doing, you're not afforded that protection.
Mm-hmm.
Okay, that's as simple as that. It's an action in equity, actually.
And the commingling of funds, I think that's the one that
Mm-hmm.
that concerns me the most. Because as an example, right, I bought a duplex, right, in Indianapolis, and I didn't have the funds in my LLC, right. I have one cash flowing property that after expenses I'm seeing about $200 or $300, right. So I'm not going to have a lot in my LLC checking account, right. So I went and I purchased that with personal funds, right. Now, it's titled in the LLC's name, right? And I closed the LLC's name, signed everything. So, and then, the insurance is paid out of the LLC. And, so at what point would that be considered, or should I have transferred money into the checking account and then bought it? That's the commingling of funds, the rules there.
Let's start, first of all, you're the CPA, Mark. What's Mark's? Pardon me, Frank. What's Frank's last name again?
Alcini.
Alcini, that's right. So he would be great for that answer.
Yeah.
But in general, most people start out, they're using their own capital.
Yeah.
Okay. As you progress, you just make sure that you get, a debit card or a Visa in the company name. I mean, you have this issue, and this comes up a lot. I get these calls quite a bit. We'll have people call in who now are at a point in their investment career that they can go and get bank financing.
Yeah.
But they have an LLC.
Mm-hmm.
So I'll hear, younger investors, we're not talking about age, we're just talking experience, who say, well, if I put my property in an LLC, I'll never be able to get a loan. It's not the case. When you're dealing with the bank, when you're finally at that point where you can go get financing, the bank is going to most likely put the loan in the LLC's name.
Yeah.
And then make you the individual as the guarantor.
Mm-hmm.
Yeah.
Now, if you're just getting started and you want, let's say you're looking for like $100,000 and you qualify, but you just haven't been in business a long time for the LLC, for the real estate, they may say, no, we'll make you personally the loan. We don't want the LLC. Yeah. At that point, I have a whole article online on my website about local banking as opposed to national banking. The local institution is a better place to go for your loan because a credit union or a smaller institution, I'm a big proponent of community banking, and you should always, especially if you're newer to real estate, try and establish that relationship with a community bank, because then you can walk in, they want your business, and you can explain. You have somebody there to talk to who you can say, hey, I'm buying my first or second property. I really would like it to be in the LLC. I really don't want to take the loan out personally. They might be able to say, well, we're going to give you the loan still as the LLC, but you still are signing it personally.
Yeah.
Okay. That's just how it is. You can't do that with a bigger institution. They're going to say, you have no authority, no control. They're just going to, boot you out. The thing is that you still need that limited liability company protection, so that when you go to the bank, most bankers, I worked for the banks for years. Most bankers understand what you're trying to accomplish. Yeah. You can take the loan in your own name and then put it into the LLC. It would not be a due on sale issue. There's so many issues. Like, the law is gray, okay? And there's so many different events that happen every day in everybody's lives, especially in real estate investing. I'll give you an excellent example when it comes to LLCs, where they'll go to the bank, they want to take it out of the LLC and put it in the individual's name. And these larger banks actually, now this hasn't happened so much when the market was kind of sour, but now that the market's gotten better and you're dealing with, let's say, more national / private investors, commercial lenders, they will consider that a due on sale. Yeah. A lot of people will call in and to my office and go, oh, well, yeah, that's a due on sale. I can't do that. We have to have permission from the bank. You know what due on sale is, Chris?
It's isn't that like when you transfer the property, right? You have to repay for the property, basically.
Right. I'm not here to put you on the spot. I mean, only here to help you.
That's
why I drove all the way.
Yeah.
So a due on sale is basically when you convey the property in any way, shape, or form where the title comes out of the name of the guarantor or the borrower's name to anybody else. The bank has in their mortgage provision that if you transfer it, our money is due. But if you own an LLC and it's Chris's LLC and you're a single member LLC and you borrowed the money individually from the bank and then you transfer it to Chris's single member LLC, the argument is it's really the same individual. Okay. But a banker, somebody who's aggressive, could say, no, you transfer that. We're going to call it or invoke our due on sale provision. Yeah. So it's better to get permission from your banker. Okay. And that's why community banking, I'm not opposed to large national banks. I work for the larger banks, but they're less personal for a guy who's getting started in the real estate
probably
business.
Less flexible in their policies.
It is.
Right.
Well, you're going to walk in there to a community bank, and you'll probably be talking to the guy who actually decided if you get the loan or not.
It's like old time banking.
Yeah. Not like, the big ones. You walk in, it's just an employee that sends it up the chain to 50 people.
Right. Or your underwriters in wherever.
Yeah,
right.
Yeah. You never even see them.
Right. It's like the old savings and loans years ago.
Yeah. Oh, God, I love that.
Yeah. Wasn't that great?
It really shows
right.
up.
I know we're kind of showing our age.
Old savings and loans.
I was a kid standing in line with my parents. I don't know about you.
Now, I was too, but I still belonged to one, unfortunately. Yeah. But Chris, so when you're getting going, you're saying that you're just getting going and you're looking at getting into the wholesale business and stuff like that. And the wholesale business is a little bit different than the buy and hold because you're not going to have anything in your name.
Right. Yeah.
You're going to be selling the assignable of the contract. Basically, you're not going to put the property really in your name. You're just going to get the purchase agreement and you're going to sell the purchase agreement.
Okay.
Which that's kind of like a limit of your liability too, because it's really never going to be in your name. Your end buyer will end up by being in their name. Then it's something they've got to deal with. But if you go into the more like what I'm doing now, the hoteling where you actually end up by buying them and then reselling them, that's something else you want to look at too. Once you start doing a little bit more.
Okay.
Than that, because the wholesaling, and that's what a lot of people need to understand about wholesaling, is you don't actually take the property into your name. You don't, then the next level you can.
That squatter might sue you.
Well, you got squatter issues. got a squatter issue right now, but I am going to go ahead and buy that one. Yeah. I'm going to buy that one. I'll probably end up by keeping it for a rental. I don't know. I'm trying to decide.
What are you going to do with the squatter?
What am I going to do with the squatter? I'm going to have the squatter removed real nice and peaceful.
You got an attorney you're going to work with on that?
No.
I wasn't
it's
looking
Detroit now.
Yeah.
It's Detroit.
Yeah.
This one's in Detroit, so.
Yeah. Okay.
They've changed the squatter laws a little bit down there where you don't really have to go through the whole eviction process like you once had to. So it'll be a little bit better. I haven't did it yet. This is going to be my first time doing it in that situation.
Yeah.
But we're going to do it.
Okay. Well, you should do a roaming camera on that one. It should be really interesting.
Actually, I'm going
and we're going to get you a bulletproof vest.
And it's in Brightmore. Anybody that knows where anything
Brightmore,
is, this is in Brightmore.
Brightmore is an up and coming area.
It is, and that's why I'm going ahead and I'm going over there.
You still got to be careful.
Yeah.
See, I'm not going to argue with you about the new law.
Yeah.
But I heard you the other night at the REIA.
Yeah.
And then somebody said, "Oh, really? We can just pull the guy out?" And I'm like, "Oh,
well, it's a
no,
little bit more than that."
Right. So
more than that.
I don't want to be giving anybody legal advice on squatters. Without knowing the particular circumstances. But in general, you can move their personal belongings out. You can't touch them.
No, you can't touch their body. Yeah, right. You can't touch their body.
So good luck with that, Jeff.
Yeah. Well, I will be hiring people. I'm a little bit too old to be doing that now at my stage in life. But yeah, it's going to be interesting.
The police don't want to pull you. They won't pull those people out. They'll tell you to go to court.
Yeah. And I don't blame them.
Yeah.
I don't blame them, to be honest with you.
When are you doing this? What day? We want to watch.
Yeah. Well, I got to send it to Erica to get it closed first.
Oh, there you go, Erica. Erica, are you going to go down there with him?
There's an app for it. There's a squatter app in Detroit.
What?
You're kidding.
What's
Boy, there's an
squatter
app for everything.
You guys don't
It helps you
know.
find squatters.
No, that
Come
was
on
good
over
to
here.
chime in. That's
very
great. There's a
interesting.
squatters app for
Squatters
people in
app.
Detroit.
I'm
Should've-
just,
Hey, I'm
just wondering,
downloading that right after the
does
show.
that app allow you to find squatters, or does it allow squatters to find vacant properties? To
Yeah,
squat
that's
in?
a.
right.
That's good.
Yeah.
Directly the squatters.
Oh, okay.
I see.
All right.
Yeah,
That's
there you
really
go.
interesting. So you learn something new every time you
See,
come there.
now, Chris, when you get into the wholesaling, you might run into this because it happens even in the suburbs.
Okay.
You'll get squatters. I mean, this particular situation, his renter moved out. And literally, as they were moving their stuff out, this guy slid in.
Wow.
So would you change the locks or be there to change the locks?
Well,
to make sure no
he
one could
was
do
an
that?
older guy, and he didn't do that. He got the woman out, and he said as they were moving out, he moved in. But he's in his 70s, an older
The
gentleman.
squatter.
No, the guy that owned the
okay.
house. So he didn't want to deal with it.
Yeah.
He's like hands off. I'm just going to get rid of it. He didn't want to have to deal with the situation. But when you come into that, this is some of the kind of stuff as a new beginning person.
Mhm.
Advice for beginning people. These are the things that you're going to run into that you got to be able to help people resolve.
Okay.
Especially being a wholesaler, because people are going to call you and they're looking for help. So when they come to you for help, your job is to help them. That's what a real estate investor truly, really is.
Right.
It's a
And
helper.
that's why it's great to be a part of this network, because there's so many people that can help, and so many contacts that you can call when you might not necessarily have the answers.
Yeah, and that's the beauty of this group when it was started. This group right here is all about helping. We've decided that one of the tags of the group is is sharing the love and helping, and that's what it's all about. We got to help everybody. Why can't we be a big community that helps one another instead of worrying, having that scarcity mindset? How most
Well, they
people have.
I've seen it, like where people attack other people online.
Yeah.
It's not necessary.
Foolish. It's
Right.
not necessary.
Right.
Why not help? There's plenty of deals.
Oh yeah.
Help you get a
Although
deal.
it's
Help him,
it's
help
okay
Dave,
to
help
when
them
you see
all.
that stuff online to recommend. I try to do it is you need to go see a real estate CPA and a real estate attorney. This
Yeah.
is not the place to be
No.
asking
And asking for them
Yeah.
kind of questions. It's crazy.
Yeah.
Actually,
That's
it's really, when you go online, you see what people put up, like with regards to, like, how do I just saw one today. How do you do this wood floor? Did you guys see that one?
I didn't see
And
that.
it was just like, wow, somebody had a really, like one of those hints from Eloise. Remember that? It's like, okay, I'm dating myself.
No, that one might be older than me now.
Yeah, just like it was, how to get a spot out or something like that.
Oh,
But,
yeah,
it's
okay,
really
yeah.
it's really kind of cool. Sometimes people come up with really great ideas.
Yeah.
Or helpful hints, but the problem is that sometimes they're not nice.
Yeah.
It doesn't need to be that
yeah.
way.
Yeah, there's no sense to be in that way. And that's what makes it great with having you guys is getting the help and bringing on young guys like you that's starting. And
appreciate
once
that.
you
Thank
get
you.
it figured all out, and you will too, because this
You're
stuff
gonna have an
isn't rocket
opportunity to
science.
share with us all of your bumps and scrapes.
Yeah.
Well, you already
I
have a
will.
house right now. You have a house right now.
No, I do
Oh.
not.
Have you flipped anything yet?
No.
No.
No, he just started.
Oh, you
He's
really
getting
just
ready to
started,
go.
yeah.
Yeah, he's
Today the day?
green as they
Today's the
can get,
first
right?
day?
You never know. No,
We
today's
were all
not the first
green.
day.
We
Yeah.
all started out somewhere, right?
Yeah, everybody started out with zero.
Right.
And then you get to moving. What you'll find is like David, he does all sorts of stuff. He hasn't even hit the beginning of what he does. When you find out what you really like, you'll dabble a little bit in everything, and you touch a little bit of all of it. Then you'll figure out what you really want to do. Do I want to be a flipper? Do I want to be a wholesaler, or a holder, or buying notes, or selling land contracts, and all this other different stuff? Because there's so many exit strategies out there, and so many ways to do the business. Once you dabble a little bit in everything, you'll kind of figure out what you want to do. What's going to be my niche? And we all do. We all figure out what our niche is. We all kind of figure out, okay, here's where we're going. Now, wholesaling makes money. And a lot of us have started out doing that, and a lot of us do flips and different stuff like that to make money. But myself, now I'm going into more buy and holds too. On top of that, you'll look and you'll figure it out what you really want to do, and I think that's the greatest thing about it. There's so many
Right.
ways.
There's so many different exit strategies that can be, confusing on kind of where you want to start. So you guys mentioned in I think in the very first podcast too, kind of pick your direction and stay in that direction and remain consistent in it. So that's really good advice that I've really tried to just do that. And for me, it's about the time. What strategy can I actually apply myself to and do with the time that I have available. So right now, wholesaling is where I need to apply myself and remain consistent at that. And
if you're wanting to be a buy and hold investor, sometimes you don't need that much capital, right?
No. Okay.
I met at REIA. We met a couple. I think she's a real estate agent, right? Which is a great way to find out what properties are for sale and what's going on. And she just ran across a duplex that was for sale, or the guy was wanting to sell it. And she went over there and talked to him, went down to a local community bank and said, "Hey, you give me a loan on this?" And he said, "Yeah, 80% LTV, put the money down and bought it." And then while she's cleaning it out, getting rent ready, there's a neighbor next door. "Hey, did you buy this duplex?" "Yeah." "You want to buy this one?" She's like, "Yeah." So she goes down to the same bank and says, "Hey, I want to buy this same duplex right next to." "Okay." So then she bought that one. And for long, this guy across the street, another duplex, says, "Hey, dude, you just bought these two. My buddy told me you bought these two. You want to buy mine?" She's like, "Yeah." Goes down to the community bank. "Yeah." And she bought all these duplexes, right? Okay. And now, a little scary for me, buy and hold investors, like, okay, tell me about some of the numbers. What are the
I want to know about the duplexes. She's obviously paying good price for it.
Yeah, probably, right. And that was a little concerning of me is, if you're out buying some of these, you got to make sure you know how to run the numbers, right? Because a lot of the horror stories that I hear, friends and family, "Oh, we lost our tail in real estate." You don't want to do that.
Yeah.
It's like, well, tell me about your numbers. How did you run your numbers, and how did you know that this was going to cash flow? "Oh, yeah, I don't want you. What do you mean?" Right?
No, what's like cash flow?
Yeah, exactly. Right. So, and I asked the same couple that. I said, "Tell me about these numbers." And so it's very, very important that you be able to run those numbers and understand. Is this a good deal or is it not? Because just being able to buy a duplex is not good enough, right? It's making sure with leverage that it's going to, give you your return on your investment, right?
I agree.
Yeah. Now, Paul, I know for sure because I've talked to Paul now several times about these. This guy can run numbers. He's got this down to a science. And that is very important if you're looking at even flips or even a wholesale, because you got to know how to run the numbers because it has to make sense to everybody.
Okay.
Yeah.
And that's a problem with a lot of new wholesalers when they come in, unfortunately. And you see deals out there, too, coming across tables. They have no idea what they're doing because they just go out and get underneath contract.
Yeah.
They don't understand the Mayo, and they don't understand, what ARV is, loan to value. They don't get all them issues. And it's something you really do need to learn how to do anytime you're going to do real estate. And I know Paul, he's got it down because we talked the other night about some numbers.
Even
in his head, he's doing
even as a wholesaler, who are your customers?
Yeah.
Right. Your customers are guys like me, the cash buyers. Right.
Right.
So you got to know, if I want to put this property under contract, who am I going to? Who on my cash buyers list is going to take this? And what kind of numbers is that those cash buyers looking for? If they're looking for a 12 cap or a 15 cap, when you put that guy under contract, you got to make sure there's enough gap margin in it for you, right? And then you got to make sure that the number you're going to wholesale to him lines up with his 15 cap or 12 cap, because I'm not going anything lower.
Right.
There's, in the right market, you can find that kind of stuff, right? So, and I had a few wholesalers that I was talking with, and it was like, let's run these numbers and look at what kind of customers are you looking for, and some of them had great deals, right? You look at the numbers. So
that was definitely.
Yeah, thank you. I mean,
you should get a whiteboard, Paul, and put the numbers up.
This is the first podcast I'm going to do on my own for Dylan. Is I'm going to just be whiteboarding it, right? This is
a
how
great
you
idea.
run the numbers, man.
Right.
Yeah, because it's very important. Yeah. And now there's apps out there even to run the numbers. There's different stuff. Yeah, there's
Squatter app.
Well, there's other groups and stuff that have them.
I hate to plug for Bigger Pockets, but I run back of the napkin numbers, But once the numbers on back of napkin work, I go and plug it into the Bigger Pockets calculator, right?
Yeah.
And then it prints off a really nice, report of what all the numbers look like and whether, how well.
Actually, they got a good one. I use it myself.
It's
too.
yeah, it's great.
It's a good one.
Yep.
Yeah, I mean,
Yeah.
I understand a lot of the numbers, but one of the things I struggle with is, repair values and really putting a value on that stuff when you're looking at the property, because you can totally.
Well, that's actually a hard one to figure out. That's going to come with experience.
Yeah.
Or sometimes you might even be better off when you're getting started. It might cost you a couple dollars, but there is contractors that go out there with you for some money, and they'll walk through the property and give you, just a rough estimate.
Okay.
And they'll tell you, okay, basically, you're going to have to do this, that, and here's how much it's going to cost you. But once more and more you do it yourself, you'll be able to figure that out.
Okay.
It takes a while, though. That's something that you're not going to learn
right.
overnight.
It's all
That's
evolutionary.
Right.
Yeah.
It's all organic.
Yeah, it
I'm
is.
actually, me personally, I've only been at this for less than a year, right? I've got 3 properties, but, it's taken me some time, and I'm still working on it to figure out, when I ask for estimates, one of the best ways that I've learned is I have certain contractors in Indianapolis that I work with, and I'll send them out. I'll do 3 bids. And the bids that come in, I'm very strict with them and say, I want a breakdown of piece price and man hours, right, for each line item. And then you can kind of compare that. You can kind of get an idea. Okay, windows. What are my guys going to do windows, and how many windows do I need, right? Flooring. What's the square footage of the place, right? Is there drywall? Is there cabinets? And you can really go down and scan these bids and get some kind of an idea. You kind of get a feeling. And then when you walk into a property, you can kind of run your numbers and say, okay, this is what it's going to look like. Dylan's got it down, down pat. He's, so that's like you said, it's time and experience, looking at bids and actually doing flips or renovations.
All right.
Let me ask you something, Paul. How do you manage your properties long distance? Pardon me. You have a property management company, or you
I
go
do.
down to the property? What do you do?
Yeah, well, I'm ADD, so I manage
Right. You manage your property manager.
Yeah, exactly. And I actually had to fire mine. We talked about that on the Facebook page. You got to find a property manager that you trust, that returns your calls, and that is follows up and gets things done. And I have, I'm a manager in engineering, and I have been for a long while. And, when I'm hiring people, it's the same thing for property managers. Is if I trust you and you say what you're going to do and then do what you said you would do, then you and I are going to get along fine. But so building that team, your attorney, your CPA, your property managers, that's the way I manage my properties.
That's smart.
You have to. I've been doing this since 1990. And I learned from some really great people. And that's really what we're talking about, right? They shared with me and taught me. And you cannot be an absentee owner of anything. And you've got to be on top of people.
Yep.
And
even property managers.
Well, yeah, we were just talking about that.
Yeah.
So one of the big area of my business, I hate to say it, but we sue property management companies for investors. Yeah. There are some people who shouldn't even be in the business. I won't name them, of course, but their job, really, they're not in the business of being property managers. They're in the business of really ripping off real estate investors and not giving them their rental money, overcharging them for repairs. Those people don't stay in business too long anyways. Yeah. But you have to. That's why I want to know. One of the things that I've always found, actually, I learned it the hard way, because I've owned properties all over several states, but it's best to have your properties within like an hour drive. That's kind of how and clustered in the same type of area. If you're doing buy and hold, or if you're a landlord, it's
in
much
Michigan,
better.
that'll work too.
Yeah.
If you're concentrating on Michigan, we're in an area where the investing is a lot easier than other states. And like down there where you're at, it's easier down there. Now you go in California and you go over to the West Coast, it gets a lot harder. Colorado, California, them, because the numbers, it's hard to make work. And a lot of them guys are doing long distance just because they financially have to. But here in Michigan, you can definitely pick up rental properties anywhere within an hour. You can pick up wholesales. You can pick up flips. There's everything within an hour of us here.
Yeah, I mean it's also so if you're running a crew and you need you have to have your handyman go out and take care of tenants or you're trying to flip it. If you have just that one area, you know who you're dealing with, you know the cost. You can use the same people over and over again.
Yeah, over and over.
And also have a relationship with the municipality that you're dealing with.
Because that's bigger than what people think.
I was about to say nothing's worse than being the newbie that goes to the planning desk or the ordinance desk, and you're like, hey, I need this, and they're like, no, we're going to work with you. We don't know who you are.
I've gotten very lucky. I've gone through a lot of different people, interviewed a lot of people, had some success and had some failures with people in Indianapolis, and I'm very fortunate. I've got to the point. I've got a rehabber that he runs his own turnkey business. Yeah. So I'm probably in the future will buy some turnkeys from him, but he does rehabbing on the side. He actually purchases REOs, right? Rehabs them and then sells them as turnkey, right? Yeah. But REOs are starting to slow down a little bit, right? And so he's rehabbing them, but he's very reliable. Sends me pictures constantly. We text almost daily. Yeah. And I work with his property manager, and he kind of indemnifies me to some point, with his property manager. He said, if this property manager doesn't work, then I'm going to be on them, and if they don't work for me, then we'll move your properties together. So it's just all about finding people you trust, and that's what makes me nervous about even investing here in Michigan. Is now I know a good attorney and I know a good CPA, right? But property managers and I don't think even if I had properties here locally, I don't know if I would manage them myself, right? Because I don't necessarily want to be a landlord either, right? But definitely holding people accountable to what they say they're going to do, and if they don't get that done, then we find somebody that will, right? Yeah.
So, Chris, did we scare you off yet?
No, absolutely not. I mean, I think real estate investing is obviously it's important. It's an important part of just finance and your personal finance, and you can do all types of stock market investing, things like that. But everybody's got to do something to prepare for the future. And I think real estate is just another tool to help you build wealth and have other streams of income.
Right.
Yeah. But, we were talking earlier. You had went to college actually and was starting out to do something else. What was that?
I originally went to school. I got a business degree and majored in finance. So I like personal finance. So I originally did that just for myself. So I knew how to do it. So I took some classes on. Obviously, I took a lot of finance classes, but I took some classes on real estate, in college and out of college, and knew that there was just a time that I had to make that move and really start getting involved in buying properties and getting more involved in real estate to help just build that portfolio and prepare for the future.
Yeah, I'm just kind of to add, like, your finance major, you were doing personal finance. The only thing from those books that is helpful are all the calculations that you definitely need to know. Yeah. But everything else is just learned by doing. Right. You can ignore everything else. Trial by error, right?
Get on it.
Yeah, I almost think I learned more outside of college.
That's
finance than I did, when I was actually in there. So
no, but you've definitely taken a path that a lot of people wish to take and dream to take. Now you're going down that path, and it's more about with all of us, it's more about a more than just financial freedom. It's freedom. With real estate, it can give you that kind of stuff. It can give you freedom. It can make it where you don't have to get up, like myself personally. Of course, I'm retired, but people make fun of me because I'm not getting out of bed at 4:00 in the morning no more. I'm not doing it. I did that for 32 years. It's not happening. Yeah. I'm going to get up a little bit later. Sun's up usually when I get up now, but yeah, it's up. But no, it works. So you guys, as we're coming here to an end here pretty soon, is there any good books that you guys have read lately, or anything that you guys podcasts or anything else that you guys listen to or read that have helped you out, that gives you some motivation? Chris, how about you?
I would say, on a personal finance note, like one of the books that, I like, and I actually bought it for my stepson who's 18 years old and graduating school. And it's one of those books that I wish someone would have given me at that age, because it kind of just simplifies things. It's The Richest Man in Babylon. I think that's a really good one, for young kids to start. Those are just graduating high school and things like that. It just helps them build that foundation on, how to move forward in life, and what to do with your money and how to protect it.
That's not required reading in finance school.
It might have been, but at the time I didn't. Kind of like a base. Right?
It might have been.
There's some books like that. I'm an engineer, so I didn't take hardly any finance classes, right? A few, accounting and such. But there's books that I've read that it's like, this really, Rich Dad, Poor Dad's another one, right? These should be required reading, right? For all college, especially, the idea of, buying assets instead of liabilities, right? Because a lot of these engineers, doctors, lawyers, they go out and they have these big high-powered jobs. And what do? They buy a whole bunch of liabilities that don't make them any money, and it just sucks them, and it's disappointing to see that, right? There's not enough financial education in the world, and some of these books are a great start for that.
Yeah. David, I'm sure you read a lot and listen to a lot of stuff.
I read way too much at work, right? I'm always reading. Thank God for podcasts, though, because I actually, it's not so much real estate inclined, but I listen to this one podcast called The Side Hustle. I don't know, the Side Hustle Show. I forgot the guy's name. But there's a lot of very good principles in that, just for running your own business and just in life. But I do listen to a lot more podcasts. Yeah. My stuff's more like personal productivity stuff. Yeah. I need a lot of self-help.
Yeah. That always helps. Right. And there's so many different podcasts out there nowadays.
Tons of real estate podcasts.
Tons of it. Tons. But I don't read anymore. It's all Audible book, which I great because you get in the car, because we're always in the car a lot for real estate. Get in it, kick on the Audible book, and you can, go at it.
But there's nothing more valuable as a podcast than this podcast.
That's right. This is the best.
This video, right?
Well, this one here is what's going to help a lot of people. And I think that's what it's all about. It's going to be more of a helping podcast like we did here today. Ask questions, say different stuff that helps people. And that's all part of this group, is helping everybody and everything else. And that's why we really like it.
I was really happy to hear that at the last REIA, hey, I saw you on the podcast. It's like, well, I hope what I said was helpful, right? That was the whole point, right?
Yeah, absolutely. Well, guys, we all thank you for this. We thank you for your time for the podcast. Is there anything you guys would like to say? Is there any way to get a hold of you guys? If somebody wants to talk to you, how can they get a hold of you? Chris?
Well, you can always send me an email. I'd probably just send it to my Gmail account. It's chris.j.jens@gmail.com. That's probably the best way to get a hold of me.
We'll have it in the show notes.
Yes.
Yeah.
There you go. In the show notes, that'd be great. Paul, how about you?
Yeah, same thing. I'm on Facebook. I'm actually pretty active in a number of the different real estate groups. Definitely in this one. So get a hold of me on Facebook Messenger. And then I'll give Dylan my contact information in the show notes. That way, if anybody wants to reach out to me.
Yeah, and you do a lot on Bigger Pockets too, don't you? You're in there a lot.
I use Bigger Pockets, and I'm more of a passive observer in Bigger Pockets. I'd like to ramp that up, but there's only 24 hours in a day. So,
David, how about you? Now they can get a hold of you for sure.
All you have to do is type in my name, David Soble, Soble, on Google, and I pop up quite a bit. But also, I like to talk to people on the phone better than email. And so 888-789-1715. You're always welcome to give me a call.
Okay, guys. All right, we're going to wrap it up now, guys. Thank you from the Michigan Real Estate Investor Network podcast. We appreciate everything that you did, and we'll see you next time. Thank you, guys. We're going to shut her down.
You've been listening to the Michigan Real Estate Investor Network podcast. We just call it the network. To subscribe to the show, go to www.michiganreinetwork.com, where you can have the show sent right to your inbox. Subscribe on iTunes or your favorite podcast app. If you'd like to be on a future show, there's a link on the site to submit your info. The network is 100% focused on the Michigan real estate investing community. Whether you're brand new or a grizzled vet, we want you to be a part and share the love.